Welcome in, folks. Got a four-piece for you here today. 4 videos up for me to react to. First one I thought I'd react to is this video from yesterday. Dumb money just went all in stocks. I thought that was an important subject. We'll speak about that. What is dumb money? What is not dumb money? Which should be an interesting subject to cover. Okay. Then we're going to go ahead and react to this one. Steve White, Mr. Short Hills Capital, buying more Nvidia. I mean, it seems like not that long ago Steve White was so bearish. And now to hear him buying more Nvidia when it's, you know, we can call it on a split adjusted basis, $1,250. Very interesting. Then we get into this one, Ross Gerber, on why he's opposing the Elon Musk $56 billion pay package. That should be an interesting one to react to. And then last one up here, this is actually, I think, going to be very helpful to a lot of folks. I wanted to react to this video. I thought this was very interesting. Stoic doesn't control what happens. They focus on how they respond to what happens, right? And I think Stoicism can definitely help a lot of people tremendously when it comes to business and when it comes to investing. So I thought that would be a great kind of end of video recap there to get into that one, okay? Appreciate y'all joining me as always. All I need from you guys, smash a like on this video, that thumbs up button, and make sure you're subscribed. We're getting close to 46,000 subscribers here on the channel. I appreciate each and every one of you. Let's go ahead and get into this.
The largest number of investors bullish on U.S. Dumb money is all in on the stock market today, with the largest number of investors bullish on U.S. stocks since late 2021. Just over the last 50 trading sessions, investors have been getting more and more bullish on the stock market, now reaching higher levels of complacency than December of 2021, just a couple of months before the stock market began a 25% drop. This line that you see here is a simple survey that asks investors whether they are bullish or bearish on the stock market. And since 2007, we've seen this vary up and down, but when we add the stock market on top, we see that moments when investors were very optimistic on the stock market often coincided with significant market peaks occurring before several substantial market corrections, including the 2008 financial crisis. We're going to see what...
No, the one part that's kind of flawed there, right, is that particular survey, the AAII Investor Sentiment Survey, that can stay very bullish for quite some time. It does not mean it's guaranteed to stay bullish for a long time, but I've seen that survey stay bullish for several years, really, just to be quite frank. Like, if you were to look at it as a whole, it would be in a very elevated bullish space for years, right? So he has a point in terms of, like, you know, at some point in time, if everybody seems like they're bullish, if everybody seems all in the market, right, then I mean, who's left to be buyers out there, right? It seems like there's only downside at that particular time. I'll also push back on this narrative. Dumb money. Listen, okay? What is smart money, okay? What is smart money? I mean, to be honest, whenever I think about dumb money, actually what comes to my mind a lot of times is a lot of Wall Streeters, just to be quite frank. These folks follow each other around. If they're all going bearish, they're all going bearish. If they're all going bullish, they all start going bullish. And they really follow each other around. So I don't like this narrative of sometimes dumb money, because sometimes people try to say dumb money like that, and they're talking about retail investors, right? Which I think is pretty disrespectful, because I know a lot of retail investors that are brilliant. Like, they're much smarter, more intelligent, make much better investment decisions than I can tell you a lot of folks on Wall Street do. And so, you know, that's just kind of where I'll push back against that, okay? And I know plenty of these folks, so let's keep getting into this.
This extreme optimism means today for investors that want to be smart money, what it means in terms of timing the stock market. And I'm also going to show you a rare signal that just occurred that's giving the US stock market today a very 1987 vibe. When so many investors are bullish on the stock market, smart money typically gets defensive and begins to scale back their exposure to stocks. And the opposite is true when many investors are getting pessimistic on the stock market, like in these instances right here. Those are the moments when smart money wants to buy stocks at a discount. We saw this in real time in 2020.
Yeah, buy low, sell high.
Investor sentiment completely turning around from this extreme pessimism in 2022 to extreme optimism in 2024. Is it once again time to be contrarian and think about scaling back our exposure to the stock market? The way that contrarian investing works is that if most people are fearful or pessimistic on the stock market, it probably means they're willing to sell their stocks at a cheaper price than what they're worth. When most investors are very optimistic, they're probably willing to buy stocks from you at a premium. The rational contrarian investor can take advantage of both of these fearful and greedy markets. Today, with the price of the stock market at much more elevated levels and investor sentiment getting more and more optimistic, We're definitely not recommending our clients to buy stocks with both hands for the long run like we did in 2022. In fact, investors with a long-term investment horizon should probably be thinking about building cash at these levels. Now, unfortunately, contrarian investing is not the greatest way to time the market perfectly. In May of 2021, for example, investors were already extremely bullish on the stock market, but it wasn't until January of 2022 that the stock market actually peaked, so 8 months later. So a contrarian investor...
Exactly, and it took, obviously, inflation to be completely out of control, and then the Fed to obviously reverse course and then start raising rates the most rapidly they've ever raised them in history, right?
Missed out on these 8 months of gains. Now, eventually, they would have been able to buy the stock market at a much lower level than what they sold them for. So that's
exactly, this is the point I was trying to make earlier, right, where okay, you might see an indicator like this very bullish. You may say, okay, we're due to go down. Well, you might be waiting months. You might be waiting years for that to happen, right? So I think the interesting moment will be when the Fed actually cuts, because that could be a moment where actually the market starts to go down. A lot of people are expecting the market to blast higher when the Fed actually cuts. Don't be surprised if then we start to run into some trouble.
We're telling our clients today. Our strategy is much more of a day-by-day approach for traders and investors that want to continue riding this bull market as long as the price action and the macro environment remain bullish. Or in other words, as long as financial markets remain risk on. We just saw the S&P.
Let me push back against this also here. The big problem here, okay, is when you're starting to make your investment decisions based upon what you think is going to happen in the economy, what you think is going to happen in the stock market, you're already kind of losing, in my personal opinion. You really need to be focusing on what your companies are doing, where your company's valuations are at, right? Rather than trying to time out what you think is going to happen in the economy, how the market's going to react to what's happening in the economy and these earnings and those sorts of things, right? Just focus on a lot of your portfolio. It's fun to kind of see what's going on out there and, try to predict. But when you actually go to make your investment decisions, I think it's much easier to focus. Let's say you're focusing on Shopify. I think it's much easier to focus on where do you believe Shopify's revenue growth is going over the next 5 years, right? Why do you think it's going there? What do you think Shopify's net income is going to over the next 5 years? Where's the market cap today versus where their net income is going to be 5 years in your opinion, right? That's, what type of PE ratio do you think should be valued at in 5 years from now, right? That makes it so much more of a simple game than trying to gauge out exactly when the economy is going to get hit, exactly what the Fed's going to do, when they're going to do it, right? I mean, everybody and their grandma was predicting the Fed was going to be cutting like crazy this year, and we haven't seen one cut yet. And there's talk that maybe there won't be a cut, or if there is a cut, there's one cut coming, right? And Wall Street, once again, is Wall Street dumb money or smart money? Let me ask you. Wall Street was convinced we were seeing 4 to 6 cuts this year. Where are those 4 to 6 cuts at? We're going to be lucky if we get one cut, right? Think about that.
500 bounce off its 100-day moving average and off a key price channel that we repeated many times would provide a huge buying opportunity for investors. But it's not just the price action of the S&P 500 that's risk on today. We're also seeing signals from the rest of the market that suggest we're still in that type of environment. You may not have heard of it, but this is one of the most powerful risk on indicators for the stock market. It's the gold to silver ratio that just triggered a very rare signal. We recently saw a huge breakdown of this gold to silver ratio, which means that silver is outperforming gold substantially. Now, this breakdown tells us a lot about how precious metals investors are feeling about the market. Everyone knows that gold is a safe haven. It protects you from any sort of risk in financial markets. Silver, on the other hand, is a lot more volatile than gold. It goes up and down much more aggressively. So precious metal investors flock to gold when they're feeling less confident about financial markets, and they flock to silver when they're feeling very confident about financial markets. And so that's why this breakdown is so important, because it's telling us that precious metal investors today are confident about financial markets. Now, I'll
push back against that a little bit, right? I mean, right here, great buying opportunity, unbelievable buying opportunity in the market, right? And you could say, this gold to silver ratio was really low at that particular time, right? This was also a great buying opportunity. That was also a great buying opportunity, right? This was a great buying opportunity. So I don't know how much faith I have in that one.
I can prove my point. I've highlighted 3 moments here on this chart where the gold to silver ratio did something very similar to what's going on today. When I add the S&P 500 You can see these breakdowns in the gold to silver ratio happen to be followed by large moves up in the market. So we can say that these breakdowns are risk on signals. And we can go back further in history as well. All of the breakdowns that you see on this chart are similar to the one we have today. And all of them were followed by significant rallies over the next few months, and in some instances, years. But there is one problem that makes today different from all of these instances that you see here. Today, as I showed you at the beginning of the video, investors are optimistic on the stock market. Most of these breakdowns that have occurred on the gold to silver ratio happened when most investors were not optimistic on the stock market. In 2020, they were not optimistic with an ongoing pandemic. In 2016, they were not optimistic. In 2010 and 2003, they were definitely not optimistic like they are today. Many of these breakdowns in the gold to silver ratio occurred after significant drops on the stock market that damaged investor psychology. All of them except for one, 1987. This is a moment in history that we've compared many times to today in recent videos because of how many similarities there are. We can see this breakdown in the gold to silver ratio also occurred after the stock market had all...
Yeah, so this gold to silver ratio, the bottom line is I don't have a ton of faith in that. And if you're trying to time out the market perfectly here, no. Now, one other thing I do think is just important to kind of factor in here, this particular channel has been pretty incredibly bearish for a long time, right? I mean, it's pretty self-evident when you kind of go through the channel and you watch our videos. But that being said, I actually love watching, a lot of bearish videos personally. If you wonder, what do I watch more? If I'm watching YouTube related stock market stuff or market stuff, I actually watch a lot more bearish stuff than bullish stuff. And the reason I personally decided to do that, right? I mean, so yeah, obviously that channel's been pretty bearish for a while. The reason I love to watch a lot of bearish stuff is I'm going to usually lean optimistic. I'm going to usually lean bullish, right? And so I love to just hear why it's all bad, right? And sometimes there's some good data in some of these videos, right? Sometimes it's like, oh, this is a little bit of a reach, but I love to hear actually bearish takes. I enjoy it very, very much, very, very much. I actually enjoy it more than bullish. So anyways, that's just my opinion on that. Alrighty, so let's talk about Mr. Shorthill's Capital, buying Nvidia. Interesting.
To tell you about Weiss, we're going to toss it over to you. It's your time now, Weiss. It's your time. You just bought
Joe,
more.
could you get me lunch?
You just bought more. Well, ignore it, Joe. Ignore it. We just bought some more Nvidia. People calling this one of the biggest momentum trades of all time. What made you buy here?
Well, I bought it here because of the momentum. I owned enough of it. I just thought that as soon as the number hit the tape, the stock is extremely liquid. It traded more than 10 million shares pre-market. So it was a good opportunity to get some exposure on a trading basis, coupled with fundamentals I think are exceptionally strong. So from that standpoint, it was sort of an easy one to get into.
Easy, though, because you're just highlighting the multiple expansion in the market. I mean, Nvidia's multiples actually declined, but still trading at just about 47 times forward PE. So that's easy for you to buy into?
Yeah, for the trading part of it's absolutely easy to buy into because the catalysts were there. The catalyst being that the market was going to go higher today. So immediately on the number, right, the futures and the pre-market traded up. I think I bought Nvidia only up $1 a share. So I'm not getting rid of my other position, which is not one of my largest positions, because I've never been comfortable with the valuation, even though it's not excessive when you look at the growth. But I just thought it was an opportunity to get advantage of. The Qs had already moved nicely. Everything else had moved nicely except for ASL and this. And then they too moved. So
Joe, I see you over here shaking your head, but worried at all about concentration risk? Actually, Apollo's Torsten Slok out with a note today talking about extreme concentration and returns in the S&P. Basically, I'm going to boil it down. Everybody can read it home, but basically just saying if Nvidia starts to decline, then S&P is just going to be hit hard.
Frank, I run an equal weighted strategy. The distance between the equal weighted performance and the performance of the S&P 500 has not been this wide in nearly 30 years. So look, I'm okay with that. I understand it. I've been doing this a long time. It's part of the cyclical nature of the business itself, but you have to respect right now the performance of Nvidia, of Apple, of these mega cap companies. They're leading the charge higher within the marketplace.
This is why I hate these titles of like dumb money, smart money, these sorts of things, because, you know, Mr. Steve Weiss, he was incredibly bearish for the longest time while the market just went up and why stocks like Nvidia went up and up and up, right? And now, after this incredible bull market we've really had since, you know, Q4 2022, now, you know, you hear the stuff like he's jumping on Nvidia, he's buying Nvidia, and it's just like who's smart money in the end, right? You know, that's just insane to me. And so that's why I hate these type of titles of like dumb money, smart money.
I'll understand the fundamental reasons why, but I'll tell you what, Steve's buying today. The reason that you're seeing the advance today in Nvidia and Apple is because the market is dominated by algorithms. And on a day like today, the algorithms are pivoting in the direction of these companies which have shown the very strong performance. Apple, by the way, is now back to being the largest market cap. I think it's at 3.34 trillion. Nvidia has to step it up. It's fallen into third place. Again, it goes back to what I said at the beginning of the show. Trends are a very powerful variable within the market.
Elf on a shelf over 200.
You don't want to fight the trend. I've often said if you're looking to be a seller in the marketplace, you want to do it when the market rolls over. It gives you the evidence that it's beginning to do so. There's no clear evidence to that. Nvidia and Apple are representation.
Wait, I want to come over to Anastasia.
Let me just give you
one second. Over to Anastasia.
You know, I will say, you know, we were kind of watching that previous video, right? I will say it feels more toward the latter innings of a bull market, right? Of a bull run, when I do see people that had been really, really bearish flipping over to that bullish side, right? And they're more worried about how they're going to make money from the upside of stocks, right? That kind of feels like a little later innings in the bull run overall. I will say that.
You kind of, your ears perked up. I saw you kind of look up when we were talking about concentration risk.
Yeah, I wanted to chime in on that because, I mean, obviously the market is very much contingent upon what Nvidia does, what big tech does, but not only so at this moment. And by the way, you know, going to last Nvidia earnings, my thought was, you know, it'd be nice if they deliver, but if they don't, we're still going to be okay. And the reason I say that is there's just a lot of broadening that is happening around the world right now within the equity markets in the US and elsewhere. And so, for example, one broadening that I'm watching, it's not just the U.S. consumer-driven economy, but also the manufacturing side of it that's picking up. It's happening in the United States, it's happening in Europe, in China, Korea, Taiwan, and more. So I like that cyclical momentum. You know, I also like, for example, that it's not just the U.S. economy, but it's the European economy that's also doing better. We're out of the technical recession. We have the ECB rate cuts. So that's another cyclical momentum. And then to kind of circle back all the way to Nvidia, you know, it's not just Nvidia that is participating in the semiconductor upside cycle, for example. It's other players in the data center space, but it's also some of the, PC semiconductors and some of the memory and some of the storage. So I think that one stock is important, but there's a lot of other things that can support the market at this point.
Okay, so in regards to valuation with Nvidia, right? So here's what we're kind of looking at roughly, right? If we want to compare Apple versus Meta versus Nvidia. So Nvidia, looking at, obviously Nvidia clearly has by far and away the highest trailing 12-month PE of these companies, right? 71. But let's be honest, the growth rates Nvidia has been posting up, I mean, is astronomically high compared to these other companies, right? I look at the trailing 12-month earnings per share growth, nearly 200% on this baby, right? Trailing 12-month revenue growth, 108%. Now, also, Nvidia has a much higher forward P. We can call the forward P about double, if not a little over double, what Meta's is, right? But do keep in mind, look at the growth rates expected for this year on the earnings per share side and the revenue side compared to Meta, right? So you can say Nvidia kind of deserves to trade at a premium, right? Now, you look at something like an Apple. Apple also trading cheaper than Nvidia, but the pushback against Apple is obviously the growth rates are pretty darn lame. I mean, they're not even in the same stratosphere as Nvidia, right? I mean, Apple's basically trying to cling on to any sort of revenue growth or earnings per share growth right now, right? If I recall, in the latest quarter, weren't their revenues actually down versus Nvidia? So, which has triple-digit growth. So that's some things to keep in mind, and that's why I think it's hard to make an argument that Nvidia is some crazy overvalued stock. If this stock was trading at a forward P of 100 or 150, I think it'd be an easier argument to make. But when you're trading roughly double or even less than double a forward P than Apple, and Apple's got basically no growth in their business model right now while you're growing triple digits, I mean, it's hard to make an argument that you're overvalued, right? And that's why I think Nvidia, at least in the short term, could become easily the biggest market cap in the stock market, and by quite a large margin, at least in the short term, right? I think there are going to be question marks about Nvidia after this year in terms of when growth rates slow down substantially, right? And potentially coming in the back half of 25. And so I think you'll have to deal with a lot of that then. But for the short term, Nvidia is obviously very, very attractive here. So just a little food for thought in regards to that. By the way, pinned comment today, I'll put 1000xstocks.com if you're looking to apply for access there to be able to do what I did here, compare 3 different stocks versus each other on all these different metrics, try to figure out if the stock's a great deal or a bad deal, right? You also have the earnings call tab as well. We go into metrics as well to kind of teach you exactly what all these different things are that you're looking at here, why they matter, those sorts of things. So that is definitely a very helpful service. There'll be a pinned comment down there if you want to fill out an application and get access to 1000xstocks.com. Alrighty, next one up here. Ross Gerber, why he's opposing the Elon Musk pay package. This shall be interesting.
Voted against the pay package, saying Musk is, quote, an absent CEO. Calls it a nightmare for shareholders, lose-lose situation. Ross, wow. I've quoted you so much, I don't even know if we need you as a guest. But
well, I'm hungry for breakfast, so
you know, I mean, you've been a big supporter in the past. What was it about this pay package that has given you such pause?
You know, it's not as much the pay package because I did vote for it in 2018, and certainly if you look at the progress Tesla's made since then, you know, it's been.
I don't like that. I don't like that. No. Okay, if you voted for the pay package in 2018, you better be voting for that pay package right now. You can't just like switch up and be like, I voted for it back then. No, I understand if somebody didn't vote for it back then and you don't want to vote for it now, fair play. Fair play. I'm not going to say you got to vote one way or another, right? You do you. But I look at people that you know, because that's basically, you know, as a man, you got to be a man of your word. And when you specifically go out of your way to vote for that pay package, and now it comes up to question, and now you're going to purposely go to vote against it, as a man, you've got to be a man of your word sometimes, right? All the time, really, in my opinion. But in this situation, you've got to be a man of your word. And so that's just like, that's crazy to me. If he said, you know, I didn't vote back then, or I voted against it back then, I want to vote against it again, right? Or I don't want to vote at all because I never voted before, fair. But I don't like the switch up. That's dirty, man. This stock has been a flipping flapjack and beast since 2018. We all know it. And so I don't like that at all. I don't respect that at all.
At least successful company up until the purchase of Twitter. And so, you know, for me, it's really about the process. This is a corporate governance issue. And the reason the pay package was voted down is because the board of directors of Tesla is an absent board. They're totally negligent. They all work for Elon, and it's not an independent board as required by the exchanges. And so this company is not run correctly by the board of directors. There's nobody to blame for this mess but Elon and the process that you're supposed to go through when you get a compensation package approved by your board. They just didn't do it right. And
wait a minute. So, Ross, where were you at in 2018? Why'd you vote for it then? Why'd you vote for it? So you're incompetent then? Because you didn't look into all this back then? Are you kidding me? They're like, dude, the things he's admitting right now is baffling to me. You're not a man of your word, which your level of respect in my mind, when you're not a man of your word and you vote for something and then you turn your back on that, dirty. And then you look incompetent because this was all known back then. And you look the other way. This just shows incompetence on your part, sir. What are you doing?
Now we all have to suffer through this, and the amount of money is outrageous. And on top of the fact that the performance of the company has been horrendous over the last 2 years. So that's why I'm voting no. I just think that they're just creating more problems, and Elon and the board should work on a fair pay package moving forward.
Yeah, well, you cited many of the reasons that Chancellor McCormick and the Delaware Chancery Courts struck it down, saying the board was not independent. But all that said,
I can't even watch it. I'm so disgusted. I can't even watch it. Ugh. All right, Stoic doesn't control what happens. They focus on how they respond to what happens.
Stoicism to modern life. Guests on his show have included Malcolm Gladwell, Matthew McConaughey, and a lot of leaders in the CEO world, including the CEO of Shopify, Arnold Schwarzenegger, and so many others. Anyway, here he is. He's at our table. Ryan Holiday, best-selling author of multiple books on Stoicism. His new book, Right Thing, Right Now, is out this week. Here it is. And this is book number 16.
Yes.
That's a lot of books you've been
probably
writing
too
over the
many.
years. Are you a Stoic?
I try to be.
Can we
I aspire
define
to be.
Stoicism for the audience?
My working definition is Stoic doesn't control what happens, but they focus on how they respond to what happens. And the idea that the virtues of Stoicism are courage, discipline, justice, and wisdom. So we try to respond with those things to the best of our abilities.
How much
The opposite of Ross Gerber? And I'm just kidding. That's disrespectful. I'm
are you an
sorry.
author, and how much are you
Not sorry.
like a psychiatrist to all of these people that come on your podcast?
It's surreal. When I went to my publisher in 2012 and I said I want to write a book about an obscure school of ancient philosophy, I'm not sure I envisioned any of this, and certainly they didn't envision any of this. So it's been surreal to hear from military leaders and tech leaders and athletes and actors that this thing from so long ago could have so much relevance, particularly amongst elite
And do you
performers.
feel like you live a stoical life?
Yeah.
If I think about, the greatest football coaches, certainly of our, time, I think about like Bill Belichick, I think about Nick Saban. Those guys could definitely be in that stoicism category where they're really just focused on what they got going on. The outside is just noise, and you really got to focus on your team, what you got going on, and those sorts of things. So I definitely will say a lot of the top people I've ever seen definitely are of that belief.
I'm certainly not writing the books from the perspective of having mastered these things and I'm explaining to you how easy they are. I'm writing about them first and foremost to myself because I need reminders of them as much as anyone else. I try to be stoic. I think I'm good at it, good at some of the stuff, not so good at the other stuff, but I'm
What are you good at and what are you not good at?
The discipline thing comes easier to me than courage or justice. I think I'm reasonably intelligent. I'm always trying to learn. But
break those other pieces down, the justice piece and the courage piece, what that even means.
Yeah, so the cardinal virtues are courage, discipline, justice, wisdom. So, courage is important, but in pursuit of what? Wisdom is important, but without the discipline, the strength to bring it into reality, what can you do? So these sort of interlocking virtues are what try to shape us as aspiring Stoics.
Have you found, you talk to athletes and you talk to CEOs and all sorts of other people. Do you find that there's one type of winner, if you will, that's better at this? I actually would think athletes would be because you have to go through pain.
Yeah, I think
discipline, and there's it's sort of so physical.
Well, what's fascinating
is
that what they all share in common is that at the elite level, it comes down to the mental side of things. So that you go into these locker rooms, and what they're really thinking about is not the X's and O's or how to get 1% stronger, but how to bounce back from injuries, how to deal with things not going your way, how to deal with stress, how to find peace and stillness inside the craziness. So to me, that's where the philosophy side of things really comes in. And that's what it was doing 2,000 years ago for a general or an emperor.
Okay, so if we're not, we have a lot of CEOs who watch the broadcast, and they could use some of your help. But we also have just folks who are struggling, like on a day-to-day basis, just trying to get through the day.
Yeah.
Is there anything we can tell them right now about how to be stoical in the moment?
What's cool about Stoicism, so the biggest Stoic is Marcus Aurelius, the most powerful man in the world, but his favorite philosopher is Epictetus, who's a slave in the same system at the same time. And they're both focused on this sense of how do we have command over ourselves. So even if we have a lot of power over other people, or we have no power, but how do we have command over our thoughts, our opinions? Ultimately, Stoicism is what part of this is in my control, and I want to give all of my energy and attention there.
How much of that is just having a positive mental attitude, too?
It's a big part of it. I think it's funny, people think of Stoicism as depressing or resigned, but it's really about focusing on what you control and being empowered there.
Being optimistic to some extent that I can do this.
Yeah, I mean, when you look at the life of someone like Marcus Aurelius, which has tragedy and a pandemic and war and floods and all these disasters, that he got out of bed every morning was an immense act of courage and hope, and he did it early, and he worked hard, and he tried to realize his potential. So this idea of this sort of depressive, sad, emotionless Stoic is not what.
Do we all have to meditate? Are there things we all need to do?
Well, Marcus Aurelius' work is meditations, but he's not, sitting there with his eyes closed. He's writing. And I think journaling as a practice for CEOs, leaders, athletes is how do you create some distance from your thoughts? How do you calm yourself down? How do you hold yourself accountable?
I thought about doing the journaling.
I think meditation is much better than writing for most folks. 15, 20 minutes of meditation a night before bed, I think, is much more valuable than writing for most folks, because most folks, if anything, writing is stressful for them, right? If you're a writer, that's a whole different ballgame, and you really enjoy that activity. But I would say far majority of people do not enjoy that activity. That would not be them going into a very meditative state, because it's something they just hate.
The artist's way and all of that, yeah.
That's time.
Some quiet time in the morning.
We're in the morning TV business. We don't have quiet time in the morning.
You had a drive in here, or you got time. You got time. Little quiet moments. We can imagine he was a pretty busy guy, but he's finding some time to scribble things down.
And so, in regards to kind of investing, right, and practicing Stoicism, you got to understand there's a lot of things that are not in your control when it comes to investing, and you have to be okay with that, right? You have to be okay that you can't control the economy. You also can't predict the economy, right? You can't control what happens between this country and that country and geopolitical conflicts. You can't control who's president or not president, right? Or who's in power and who's putting tariffs on this country and how that affects this and that, right? So there's so many things that you can't control, but there's certain things you can control. And that goes back to kind of what I was talking about toward the beginning of this video, right? I can control what companies I look into. I can control that I listen to their conference calls to get insight on what exactly is going on in their business and what they're planning for the future. I can read annual reports for these companies, right? I can listen to investor presentations of these companies. I can look at valuation metrics of these companies. I can think about where I expect growth rates to go in the future. I can look at what analysts expect growth rates to go in the future, right? I can look at that stock versus other stocks and compare them back and forth. I can control all that. That's what I can control. I can control who I invest into this week, right? And how big I want to build that position. I can control, if I think there's a stock that's very overvalued that I hold and I want to get out of that stock, I can control that. There's so much you can control that you've got to focus on that and then not really focus on all the other stuff you can't control, right? Look at everything else as kind of like entertainment. Like, oh, it's there to, I guess, entertain me. But other than that, I'm not going to make my decisions off that because I can't even control that stuff, right? And so I think that's just some helpful stuff in regards to practicing Stoicism in the market, right? And not getting emotional. A lot of people get very emotional about how they feel about the market and how they feel about stocks and those sorts of things. You've got to kind of get away from that a little bit. I mean, a lot of people can't even hear a bear case for their stock, right? Or they get emotional, they get mad. Oh, I get so mad, and that's. You got to be willing to hear bear cases. I love to read bear cases on my stocks. Tell me why my stock's destined to fail. Okay, X, Y, Z. I love that. If anything, that's helping me because you might give me a point that I never thought about. Right, a risk factor. Ooh, I didn't really contemplate that. That's valuable to me. Right, So, anyways, there's just kind of some thoughts around that whole subject. Okay, appreciate you guys joining me as always. Much love. Thanks so much for being here. 1000xstocks.com. That is the pinned comment down there today if you're looking to apply for access. Much love and have a great day.